Today, the case for a growth stock rally. Can the transports deliver stock indexes? And is the dollar set to rally? Also, comments on interest rates. Hello, I'm your host, Bruce Frazier. Welcome to Power Charting. To get started, recall that in the last blog that I wrote and also in last week's Power Charting episode, we talked about, is the Dow Jones completing a Wyckoff reaccumulation? And we looked at the current state, or at the time, the current state for the Dow Jones, and the fact that it was reacted on a very sharp, short reaction to this oversold trend line and then turned decisively upwards back to the area of resistance. This was a higher low and was the case to be made that a last point of support was being put in and the Dow Jones was setting up for a rally. So we will take a minute and look at where the Dow Jones is relative to that recent blog and also the episode from last week. But we're going to start today going backwards and starting with the dollar. This chart that you're looking at is a chart that we basically started evaluating a number of years ago, actually. And this goes back to 2007 with an important low right here in 2014 and also 2018. We connected those. That is a demand line. The overbought line is right there, and look at how perfectly this was touched on the rally in the dollar into the COVID decline of March last year. Then a very important reaction came in the dollar where it went downward, 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 and here we are with a recent oversold condition at the demand line right here, where it became oversold here and then touched again, and now is consolidating on this all-important support area. So with that, we can also look at the distribution structure that was taking place up here at the top. Note the buying climax automatic reaction made in 2008, 2009, that was a year-long decline. Each one of these declines in the dollar has been significant. Here we have another one that we've just been through here. And so is this about to break down and have more additional weakness in the dollar? Do we care as stock investors about additional weakness? We'll try to answer that. But looking at this point and figure chart, you can see this chart and this count, which we did this a long time ago, just refreshing your memory on this, bringing it up to date. You can see here that there was a rather wide range. Whenever we have a wide range in the horizontal count, we always take the area in the middle, but the low of 2390 was almost touched. It went down to 2410 and missed it by 2 boxes. Pretty darn good, went right down to the bottom of the objective range. So now we're having consolidation after that distributional count, and there is the potential for a much larger count. But for the time being, we focus on the one that we're in, and it appears that there's some kind of a causal structure being built either for additional distribution or reaccumulation, and it's just too early to tell. Also up here, this is a US dollar index, $ US dollar, and you can see that there's some kind of a cause building. Appears here to be accumulation. Too early to tell. I'm not going to count it yet because I want to see it come up and out and consolidate and then go take a count then. But we are going to keep a close eye on that. So with that in mind, do we care whether the dollar is weak or strong? Do stock investors want the dollar to rally? Well, going back, looking at this chart through history back to 2007, and lining it up to the S&P 500, these shaded areas, all I did was I just took this shaded area and I just put it onto the S&P. And this is the decline from the high down to the low, the high to the low. And so we can see here that these are pretty important reactions. And look what the market did. When the dollar got weak, the S&P was having a pretty substantial and robust rally phase. So if the dollar rallies, this may very well create the conditions for the stock market to pause, consolidate, and possibly even have some kind of a correction. And so at this point, keeping an eye on this area is going to be all important. And if it does fall through here, we may have the conditions for additional strength in stocks. If it starts to rally, we would be on the alert for some kind of a sideways trading range or correction. Zooming in, this is actually intraday data. The chart on the left is a 30-minute UUP chart, which the prior chart was also UUP, US Dollar Index ETF or ETN. And so here you can see a really interesting accumulation structure. Look at the count that we got, went right up into the range of the climactic action. There was an up thrust through that area, could not hold, came back down in. Now we have distribution. Now it's possible that the distribution could be even bigger than this, but the distribution area takes us back down, not to the lows. 23 or 2410 was around the area of the prior low, but it does get us close to that level, would probably keep us in the range, of that trend line and possibly hold there. And I just want to point out that if this isn't the best way to keep an eye on the dollar, is look at this beautiful structure on the vertical chart. That's a beautiful accumulation structure, beautiful distribution structure, easily transferred over into a point and figure. This here is 2-hour chart. And so this is a terrific way to be able to identify the emerging trends up and down in the short-term time horizon. Now, having said that, let's extend this concept into the Treasury bond ETF 7 to 10 year fund, ETF fund, which is called, the symbol is IEF. And I have seen and heard a number of people really lamenting the fact that the bond market has had a significant rally. They had made the case for, the inflation characteristics would cause bonds to go down and interest rates to rise. But we pay attention to the charts. And looking at the horizontal point and figure chart here, and we will look at a vertical here in a second. And this was in the daily 5 that I did earlier in the week. So go back and check that out. But you can see distribution here across this area. And on this breakdown, which was in September, we took a count, and this count takes us 113.40 to 112.14 on the IEF. We'll look at how it really pegged the range of the low and set up the conditions for accumulation. And so here is an accumulation structure. We were able to take account, takes us up to 118.86, 120.96. Well, we've had a heck of a rally. And this rally has taken us right up into this area here. 118.52 is what I had at the time that I made this chart. I'll show you a more recent chart here in a minute, but I believe that that's around the area of the high. So there is a potential to go higher. Pretty close. We could call that a hit on the point and figure. I do think the bonds have the potential to go higher. But here we are looking at the case. This chart was made on June 30th. And so in June, an accumulation was forming. We made the case. We looked at it in the Wyckoff market discussions. You can find out more. We have a free episode coming up in September. Go to wyckoffanalytics.com to see when that's going to be. It's too early to sign up. But, also this chart was put into our stock selection newsletter, the Wyckoff Market Report. But follow what the charts are saying. Try not to go with the logic or the analysis of, call them fundamentalists or economic analysts, who clearly got the bond market pretty wrong here. Here is the Treasury bond ETF, IEF. Look at this beautiful accumulation structure here, and then a pause and a backup after jumping out. And so this was, we took this count at the end of June across here. Here's a climax. Look at the volume, beautiful structure. Upward it goes. We still have a count that goes to higher prices from here, gets us up into this area, or even a little higher than that. Pretty impressive. Okay, here is the Dow Jones Industrial Average brought up to the current price, time and price, August 5th. And you can see here that we're not up and out of the danger zone. And the danger zone is right here, consolidating. We would call this a backup. And this backup area, we want to see this stay dull, quiet, narrow, shallow trading, which shows a characteristic change from the prior reactions in this, what we're calling reaccumulation. And so if we can have a dull, quiet reaction in here, which appears to be the case, and then come out pretty forcefully, then this will look an awful lot like a successful reaccumulation and the beginning of a more important uptrend. So also note that we, on the LPS, that there was an attempt to break down through the LPS, sort of like what the dollar has recently done here on a much larger time frame. This is daily data. And then it turned up, and now it's going sideways. It looks as though it's getting very close to that trend line again. And so we would expect that to hold in a bullish situation. Problem is, being in the danger zone, we have to be really good risk managers, set good stops, because the thing that happens is when you get up to resistance is you go back down towards support. And that happens an awful lot in trading ranges. It's been happening here, but now we're seeing a characteristic change with this higher low at the LPS, and now a very shallow, narrow trading. A change of character, we would say. Here is the Dow Jones Transportations. We're using the IYT, which is an ETF. Look at the breakdown here of this trend line, this demand line. Well, here we have an important breakdown, attempt to get back above it. We've come back down. We've seen this, the transports now come to this area and test higher low so far. I'm making the case here for a rally in the transports. And so with that, let's see if we can get a successful test and a rally back up into the upward sloping trend channel, and have an attempt to rally up towards resistance. Now, this looks an awful lot, and I know what you're thinking, darn it. You're thinking this is distribution, and it very well could be. So this is a sign of weakness right there. Took out key prior support levels, and then it followed through and went down. There could be a rally of a greater magnitude, which could put in a bigger LPSY. That may be all we get. We may not be able to get a return back to the highs or go higher. Too early to tell. We'll see whether or not it can rally and what the quality of the rally is. So here, let's now look at the point and figure. The point and figure, this area right in here is that distribution we've been talking about. And so we have, in the case of the transports, we have 11 columns across, and 11 columns across times 3 times 50, because the scale here is 50 points. And that gives us 1,650 points of potential to the downside. We take that from the high here at 16,150, takes us down to 14,500 right there. And then from the count line, which is at this area, which is 15,850, that gets us to 14,200. It's pretty close to a really good hit right here. And so we have, excuse my bad penmanship, but you can see there that it does a wonderful job of picking up the climactic surge down to the low. That in itself is probably a good reason to expect consolidation and then an attempt to rally. And so we're attempting to build a cause. This cause gets built, gives us a rally, could be an LPSY, too early to tell, as we were just talking about, but the downside count is fulfilled. And that is one of the key attributes of horizontal point and figure counting, is being able to tell when exhaustion exists in a decline. Now, this is actually a stock that I shorted. Now, I don't typically sell short in a bull market. I do it occasionally. I do it in small position sizes in a bull market for the overall stock market. But I could see that distribution was forming in the transports, and I wanted to participate in that in some small way just to keep my head in the game. So this chart is so interesting because this is the Alaska Airlines. As you all can see already, look at this distribution. So we have this distributional structure here. This area is what I would refer to as preliminary supply, buying climax, automatic reaction here and here, range bound condition, last point of supply, and then look at the Chaikin money flow. You want to hear more comments on how to use Chaikin money flow with Wyckoff, go to my Your Daily 5 episode from Tuesday of this week, where I look at 5 stocks and incorporate Chaikin into that. I think it's a very good tool. I like Chaikin, and there are times and contexts in which it works really, really well with Wyckoff. That's when I use it. Well, here's an example. I talked about all bullish studies in the YD5, but here is a reverse example. You can see that the Chaikin goes into the red zone and really starts to go down. There's diminishing bullish Chaikin money flow as distribution develops. Now, as the last point of supply, the test, and then the ice forms where a breakdown occurs, Chaikin money flow is confirming all that with ever deeper declines in the red zone. A downtrend follows. And so this has been a great tool, useful. Looking at the relative strength, you can see here that at the point right down here where this is a high, this is a new high in the ALK, and a new high does not form in relative strength to the S&P 500. Non-confirmation, upside non-confirmation, as this has all been labeled. So here, following that was a breakdown of the long-term uptrending moving average. A breakdown occurs here, a rally. The rally gets up to the now downsloping long-term moving average for relative strength. And this occurs on the LPSY right here. And then there's a failing test. Trend line, beautiful trend line drawn off these two lows. Notice how the LPSY attempts to get above the trend line. Here it attempts to get above the moving average on relative strength, and on the test, both relative strength and the trend line price fails at that level, and that is about the level where I shorted ALK. And so again, very small position. I just did it to keep my head in the game. downward it goes. And so you can see at the July lows, there's an overthrow under and an oversold condition where the downward trend, which was drawn off this point and this point, downward trend becomes overdone, climactic behavior, throw under, and it snaps right back and goes up and out of the downward sloping trend channel, which is a good sign for consolidation, potential accumulation for a bigger rally. Who knows? But I covered my short right in here on the test. I did not cover it on the selling climax below the throw under. I knew at the time I should, so I didn't probably execute as well as I could. I'm just being honest with you. But I think for the sake of form, this really illustrates how you combine these elements and attributes into Wyckoff method trading. So all of the elements are, I believe, in this trade. That's why I'm showing it to you. I'm not remotely boastful about it. I didn't trade very much of it. I just want you to see how the process is done in real time. And so now looking at the point and figure chart over on the right, you can see the count in the yellow shaded area. This is the LPSY to the ultimate high, which is right here on the secondary test. We take that count, look where it goes. It goes 53, 51 right into here. The decline goes to 52, which is the oversold condition, the selling climax, and then the bounce up, and then a test. And so you can see there how the point and figure chart did a really good job of identifying a breakdown in ALK and also how far it would go. This gold line here actually is the larger point and figure. So there is a bigger potential looming over this stock, but we'll see, because there is the potential to rally back up into this area right here. And that would still constitute a distributional type structure. Now, looking at the transports, interestingly, as we were talking about the potential for the transports to rally, look what's going on here with the bullish percent on the transports, making a base. So it's walking uphill. I like to trade an index when the bullish percent is starting to uptick. And so directionality is all important to me using bullish percent. Lots of different bullish percents. In stockcharts.com, do a search on $BP to see the whole list. And there's a couple different ways to see the list. It's very cool. And then I've just lined it up with IYT, which you can actually trade. But I think this is an early positive indication that a rally is coming in transports with the bullish percent upticking early on and the potential for a more important run up here. Okay, so this is the Dow Jones. This is the chart we just looked at. I'm not going to spend any time here. I'll just tell you that this particular count goes here, and you can see this actually on last week's episode, goes to 37, call it 37,867 to 38,378, quite a bit higher than the 35 level that we're at now. So consolidation here and then a run up would confirm that it has the ability to get out of the danger zone. Here is the long-term chart. These are two defined trend lines in their own right because they both have two adjacent anchor points. So upward is the stride going back to 2011 on the Dow Industrials. Above it right here, it could stay above it. Look what happened here. By the way, this trading range that the Dow was in was a period of a strong dollar environment. And so that stopped the advance, and then an important correction happened into 2020. Now we have a falling dollar again, and we would confirm that with continuation of a falling dollar. So This is a very interesting chart by a good friend of mine. We like to compare chart work. He does terrific work. And so I asked him for permission to show this. And Brian Sedway, where here's his website. He does financial work. He's really good at it. And so he did this wonderful study on the China index. And you can see here the decline in the China index, and then subsequently what happened in the S&P 500. And I'm going to let you look at this chart. You can screen capture it and really study it, but currently the China index is now dropping significantly while our S&P 500 index continues to rise. And so the question becomes, does this create a period of vulnerability? I continue to focus on the uptrend, but I do think that there's a number of things that has us considering tightening our risk management. And so however you do that, consider that. This, I'm going to just focus on this chart of the triple Qs right now. This is a reaccumulation structure, one box reversal, daily data, standard scaling, and it counts up 392 to 404 from a count line of 316, where we've touched 368, further to go. And there may be additional reaccumulations along the way, but there is counts for higher prices in the triple Qs that comes off of this reaccumulation that occurred earlier in the year. So the other thing I'd like to point out about the NDX, we only have a couple minutes left, is here's the NDX. Here is the percent of stocks above their 50-day moving average. This is a breadth indicator, and I really like it. I like breadth because it's one stock, one vote. This is all of the NASDAQ. Now we're looking at comparing it here to the NASDAQ 100, but in both cases, whether it be the composite or the 100, the 9 mega cap growth stocks really dominate the index. So here I just highlighted the shaded areas when this indicator was going down. And so down it goes, and lately we've been going down, but the NDX has been going up, which has largely been driven by those 9 NASDAQ super growth stocks. Well, keeping that in mind, now we're starting to make a low and higher lows. Again, this is a directionality indicator. So if we start to get a turn up and upticks in this, then I'm going to make the case that the low is in the NASDAQ comp, NASDAQ 100, and we're going to have a better breadth move in this index. Here's a growth stock index, the Innovators IBD 50 fund, and notice here how this area has been in consolidation since February. So the typical growth stock has been going sideways with a little bit of a downward bias to it. So unless you've been in those favored 9, 10 names and a few others, it's been very hard to make money in the growth stock area in 2021. And these indexes point that out. But this is starting to look like a last point of support, important rally. Getting above this trend line and this resistance could be a very good sign of good things to come. Now, here is the Innovators 50. Now, I'm going to quit here and stop, but we will continue this discussion as we go into the YouTube. I'm going to go a few minutes longer, so if you're watching it on YouTube, stay with us. But otherwise, thank you for being here, and we will see you next time. Okay, so let's keep going here. Here is the Innovators 50 index. Here is the NASDAQ 100. Here is the 50 Innovators 50 relative strength. So you can see here, if the relative strength can get turned up, it's going to be very attractive for higher prices from this reaccumulation structure. let's turn our attention to ARK Innovation ETF, where the ARK fund is very focused on growth type stocks and filling the portfolio with really dynamic growth themes. And so here is a decline off of an important high in February. This is why 2021 has been a very difficult year for investors, is because anybody who's been focused on growth stocks has had this experience of what the Innovators 50 looks like, and then also the ARK Innovation Fund is look at the sideways trading range. Well, this is beginning to look like a reaccumulation structure that is very close to completion here, with a selling climax, automatic rally, range bound condition, minor sign of strength, and now a last point of support and a test, and the potential to run up. Look at how you're seeing a really good upward bar here, taking out near-term resistance and trying to get up to this larger resistance area. This has the potential to be completed accumulation or near completed accumulation for higher prices. And that would give growth stocks the potential to really take off here. So with that in mind, here is the ARK fund relative strength of the NASDAQ 100. This relative strength is looking like a base. And so I love to find bases in relative strength that confirms the base in price. And the NASDAQ 100 has been on a tear. Well, now we have the growth stocks with the chance or the opportunity to be able to catch up or start to be in sync with higher prices in the NASDAQ triple Qs, NASDAQ composite, etc. Here is a point and figure chart. Look at this accumulation type structure across here. This is a large count. And let me tell you how far this goes up, what this counts to, because there are 23 columns across here, 3 box reversal times 2-point scaling, and that gives us a count of 233 to 249. Wow. So that's a substantial upward count. Now, for my purposes, I would be looking at a smaller count area segmented to here and then out to here as a way to break up the advance and the potential for advance. So with that in mind, there is really a substantial ability for the ARK Innovation Fund to continue upwards and get to the prior highs at this 158 level and then go even higher. And so that really, I think, speaks to the whole growth theme, being able to also get in gear with the Dow Jones Industrial Average and also to get in gear with the NASDAQ 100 or the triple Qs. And with that, I will say so long for this week. Thanks so much for being here. And thanks for all your great feedback and good ideas, which I really take seriously and will attempt to incorporate them into blog posts and also into power charting episodes. Take care, my friends, and we will see you next time.